Let's talk about real estate. And today I want to talk about the likelihood that the Federal Reserve lowering rates is actually going to be able to save the housing market. Now, as most of you probably know, the Fed officially lowered interest rates last week, but in anticipation of them doing that, for several weeks, interest rates trended down. And so we're going to talk about the immediate effect that happened as a result of that, but also the more important fact, in my opinion, which is interest rates actually went up after they lowered the short-term rate. And this is definitely not a good sign. I've been talking about this for a while on this channel, and this shows us that the market in general is demanding a higher interest rate to compensate for future inflation that we don't know what that's going to be yet, as well as the elevated levels of current inflation. And so the Federal Reserve is absolutely making a policy mistake by lowering interest rates, as evidenced by the response from the market. Now, before we keep talking, I want to show you what's happened over the last month or two and then the result of those lower rates in the market. If we take a quick look here, we see mortgage rates over the last couple months really kind of starting in August, as you can see here, really dropped off pretty substantially, and then they just trended down basically all the way until the Federal Reserve announced last week that they were going to lower rates. And then look what happened. Rates all of a sudden jumped back up almost 20 basis points to around 6.35%. And next, if we take a look at what has happened in the housing market as those rates trended down throughout the month of August, we see some pretty incredible sensitivity to lower rates, which is what I have kind of been mentioning in the last couple videos. You can see here that last week or over the last couple weeks, mortgage applications were spiking. And also on the last video, we had other evidence showing that also mortgage refinance applications were spiking. And look what happened. The analysts were completely wrong and new home sales exploded 20.5% higher month over month and are up 15.4% year over year. So those are huge increases all of a sudden in home sales that took place just from interest rates going down maybe 0.5% from their peak several months earlier. And you can see this here on the chart. I mean, this was an explosion all of a sudden in new single family homes sold. You can see it also here on this chart. Total new home sales surged to 800K, its highest since December 2021, and completely decoupled from existing home sales. So obviously there's also a lot of support in place on new home sales, a lot of incentives by home builders. And so the moment interest rates dropped, 0.5%, 0.75%, all of a sudden, everybody started getting mortgage applications in and trying to get a loan, and they started buying these new homes, which on top of the lower rates probably had a whole bunch of attractive incentives. And as you can see here, the average selling price soared to a new record high of $534,100 for new homes, a big spike up. So the reason I wanted to show you that new data that's come in is because it's tremendously important in showing us how sensitive home sales are to interest rates. Now, here's the big problem that very few people understand or are actually talking about. And that is that because we're seeing the market push back against lower rates by bond yields going higher on the 10-year bond and the 30-year government bond, that is telling us something very important. What this means is that the only way possible for the Federal Reserve to lower interest rates is going to be to print more money and buy bonds at those maturities, 10-year and 30-year bonds, in order to artificially suppress interest rates and bring them down. Now, the problem with that is that inflation is the issue that the country is facing right now that is creating all the calamity we're experiencing. We are seeing job losses across the country in all kinds of companies, record levels of bankruptcies, massive increasing credit card debts at limits never seen before, defaults on auto loans at the highest rates seen before, new loans being pushed out on autos to 84 months, all kinds of things that are symbols and symbolic for an economy that is cracking and doing worse and worse each month that goes by. So the last thing we can afford is the Federal Reserve to print even more money and create more inflation. And on top of that, they're going to have to print even more money and buy even more bonds in order to facilitate the government's massive and increasing debt burden and deficit spending that they won't go away from no matter what happens. So therein lies the conundrum. Even though lower rates are very sensitive right now, the reason being because so many people have probably been waiting for a break in rates so that way they can get a house because they really need something. The real question is as the Fed pushes rates further down by creating more and more inflation, is that going to damage the economy to a greater extent than the benefit from the rates falling a little bit in terms of people's ability to buy houses across the nation? And my thinking is really which effect is going to be stronger? Is the benefit we see from lower mortgage rates going to be positive enough to offset all the additional people that can't afford their bills anymore, that are losing their jobs, that are struggling from inflation? And of course, no one knows the answer to that question, but I think it's important to be cognizant of this reality and the reality we face as a nation going forward as a result of these terrible decisions that both the government and the Federal Reserve have been making for a very long time, where we are all facing the consequences on them now. It could certainly be the case that this time is different and the Federal Reserve is not successful at pushing rates down and lighting a fire back under the housing market as they have many times before, and as they've also done with the stock market. But of course, this time may be no different, and they may get lucky and somehow be able to kick the can down the road once again and create a whole bunch of new froth in housing and get things rolling again. I don't know what's going to happen, but I will keep an eye on it and I will keep you guys informed. Do me a favor, if you haven't subscribed, do that now. Leave some comments in the comment section down below. I need the engagement to help these videos do better. And most importantly, if you need help with real estate here in Los Angeles, in Orange County, you're looking to buy a home, you need to sell a property, reach out to me. My contact information is down below. I appreciate you guys watching, and I'll see you on the next video. Take care.